Remember when NFTs were the hottest trend in tech? Digital art, virtual items, and even tweets sold for millions of dollars? But today, the NFT market is a shadow of what it once was. So what happened? Why did NFTs fail? In this video, we'll break it all down. From the meteoric rise to the dramatic downfall and what it all means for the future of digital assets. Stick around, you don't want to miss this. NFTs, or non-fungible tokens, took the world by storm in 2021. They were marketed as unique digital assets, certified by blockchain technology, that you could own, trade, or sell. Artists found a new way to monetize their work, and collectors flocked to this cutting-edge trend. The hype was undeniable, with celebrities like Eminem, Paris Hilton, and even major brands jumping on board. For a while, it seemed like NFTs were the future of art and ownership. But with all that hype came speculation. Many people didn't buy NFTs for their artistic value or utility, they bought them hoping to flip them for a profit. This turned the market into a bubble. Projects like Bored Ape Yacht Club and CryptoPunks sold for eye-watering prices, but their value was often tied more to hype than substance. As more projects flooded the market, quality control dropped, and it became harder to tell which NFTs were worth anything at all. Another major blow was the environmental impact. Most NFTs were built on blockchains like Ethereum, which required enormous energy to mint and verify transactions. Critics pointed out that NFTs were contributing to climate change, making it harder for them to gain mainstream acceptance. Although blockchain platforms have since worked to reduce their carbon footprints, the damage to public perception was already done. The NFT space also became a playground for scammers. Rug pulls where creators abandoned projects after collecting millions became common. Fake copies of famous artists' work were sold, leaving buyers with worthless assets. Trust in the market eroded, and many potential investors stayed away, fearing they'd be the next victims of a scam. One of the biggest issues was utility, or the lack of it. NFTs were often sold with promises of exclusive perks, memberships, or even video game integrations. But in most cases, those promises fell short. Many buyers were left with digital files that didn't hold any real-world value, making it hard to justify their sky-high prices. As the hype died down, so did the market. Trading volumes plummeted, and NFTs that once sold for millions became almost worthless. Factors like rising interest rates, a shift in focus to other technologies like AI, and the general collapse of speculative markets all contributed to the crash. By 2023, the NFT market had lost billions in value. So, what can we learn from the downfall of NFTs? First, hype alone isn't enough to sustain a market. There needs to be real value and utility. Second, transparency and trust are critical to any emerging technology. And finally, while NFTs failed in their first big wave, the underlying technology, blockchain, still holds potential for innovation in areas like digital identity, ownership, and more. While the NFT craze may have fizzled out, it taught us valuable lessons about tech, trust, and market bubbles. Will NFTs make a comeback someday, or are they a relic of the past? Only time will tell. What do you think? Let me know in the comments below, and if you enjoyed this breakdown, don't forget to like, subscribe, and hit the bell for more deep dives into the world.